This is Christopher Lewis from dailyforex.com's trading desk, taking a look at the March 14th Forex session. In front of you I have the dollar-yen pair, and you can see that I have three moving averages on it, which is something that you don't normally see me place, but there is a specific reason why all three of these are up and running at this point in time. The green one is the 200-day moving average, the red one is the 50, and the orange one is the 100. These are three of the most common moving averages you will see, especially with trend traders. And trend traders tend to be the last ones that get out of the markets. They tend to hold on by far the longest, and it's a very lucrative way to trade, but the drawdowns can be pretty severe at times, and you have to have a lot of capital behind you. This is why, by its very definition, a lot of times you will see larger firms doing this. Well, what's been interesting is in the last 24 hours or so, we've seen the 100-day cross over the 200. So we now have gone from what had been a negative market, and you started to go flat here, but now we actually have even a moving average confirmed trend change. As I zoom out, you'll see, let me go ahead and zoom out quite a bit here. You can see I have a trend line going here that was broken above, and you can see the significance of the 80 level. With all of this in mind, I have been watching this pair, and I honestly think the trend has changed. The swap is positive, and with the Bank of Japan going so far out of its way to kill off the yen via bond buybacks, the market is essentially being flooded with yen. While this looks like a pretty ferocious rise, and quite frankly it is, but the truth of the matter is when you look at the big picture, and again I'll zoom out to the monthly now, you can see that this is hardly a blip on the radar. If 85 gives way, and I do think that's our next stop, if 85 does give way, we will more than likely run up to 90, 95, and 100, which of course in the yen is actually parity, as we just bump along going forward. The pair is definitely oversold by any stretch of the imagination, and the fact that last month's candle was such a large bullish engulfing candle after a couple of shooting star like candles, which showed that the rallies kept failing, and we've eventually busted through all of it in one large candle. This quite often will be the start of a new trend. So looking at all of this going forward and the action on Friday that saw us test the 83 mark, I think we're well on our way to 85, and I personally am already long this pair and will be adding every time we've dipped. In fact, I've already done it a couple times as we've increased. Small positions adding along the way, as I think this trend change could last for quite some time, and if it does, you may find it lucrative to look at shorter term charts, such as like the 4-hour chart, for signs of support and adding very small bits onto your position as you go along, eventually building up to a nice large sizable position. As long as we are above 80, this is the thesis that I will be sticking with.